Hey everyone, happy Thursday, January 26th. Crazy to think we're almost end of January already, but here we are. It's about 12:30 on the West Coast, and it's time for another market update. If you prefer to watch on YouTube, you can click on the link in the top right part of the screen and get there. Or if you're watching this on social media, I'll make sure to post the link as well. But getting right into it, because there's a lot of market news to cover this week. First thing we got, and I'll show you guys a little more detail, existing home sales for December of 2022. They came down 1.5%, but they're expected to come down about 3.4%, so better than expected. And really the thing to take a closer look at is inventory. So it's showing we came down from 1.14 million to 970,000 units available, which is about 2.9 months supply, where normal is 4.6 months. But a couple months back, we had a lot of people in the news talking about inventory spiking. We're in bad news. There's going to be a ton of inventory sitting there. And really that hasn't happened. Like we predicted, every year this happens. People list their homes in the spring and early summer. And so the inventory spikes. It starts coming down in late summer into the fall, and that's exactly what's happened. And if you take a closer look, it's even tighter than when normal, because there's only 690,000 active listings. So if you take out homes already in contract, which we all know will probably either close or there's a backup offer, so not necessarily available for someone to buy, there's only 690,000, which is only 2 months supply, which is again very tight inventory. And then the next thing we got was mortgage apps were up 3% last week after being up 25% the week before. And we take a closer look at this. This is a cool little graph. As you can see, as mortgage rates went up, purchase apps went down. And as mortgage rates have started to come down here recently, we see purchase apps starting to tick up. And then anecdotally, that's definitely been happening here for me personally. So as rates come down, we're definitely seeing people jump back in the market, which is good to see. And the next thing we got December new home sales were up 2.3%. I thought this was a really interesting thing to take a look at from John Burns Real Estate Consulting. So it's the number of months supply we have of new homes available. So it's showing 9 months total, but there's only 1.4 months completed down here in the red, 5.7 months are under construction, and about 1.9 months haven't even been started. You take a closer look, you go back to 2007, 2009, there was almost getting close to 6 months supply of completed. So again, a one thing to look at, complete different environment than we were back in 2007, 2009. And then loan performance. So basically how people are doing paying their loans. We got that at 30 days, or about 2.9% people delinquent, up from 2.8, so a slight increase. 90 days or more at 1.2%, which has stayed pretty flat. And then foreclosures are at 0.3%. So if you want to look at that in graph form, this is just serious delinquent, so 90 days or more. See that really spiked near, during the housing crisis, came down, started to spike again during the pandemic, and then since then's come down pretty significantly, month over month. So that is something, again, another example of why everything is a little healthier than it was back in 2007, 2009. And then going into new stuff, we got the 2022 quarter four GDP estimate. It was up 2.9% worth of growth is what they're estimating for quarter four, whereas expected 2.3%, so better than expected. We also got today, couple that with, we got initial job claims, which were at 190,000, where expected was 209,000. It's really some positive economy data for the Fed to take a look at, and it's really bringing in the debates. Are we heading towards a soft landing like the Fed has been trying for, or a recession like a lot of the banks and a lot of the experts have predicting for a while now? And the next Fed meeting is coming up next week, February 1st, and that's when they'll, basically say how much they're going to do their next hike. And everybody's been expecting about a quarter of a point hike. But with all this positive news, has that brought a half a point hike back into it? Half a point hike would not be good for mortgage rates in the short term. A quarter of a point would be kind of what's expected. But you can't argue with if there's good things happening in the economy, we can't argue with that. Maybe rates don't come down as fast, but if people have jobs to still buy homes, that's obviously a positive. And then tomorrow we get December PCE inflation numbers. And that, as we know, is the Fed's favorite thing to look at. They like to take a look at that core number. So right now the core is at 4.7. The Fed says they want to get down to 2%. So we're expecting to come in around 4.4, 4.36. If we get lower than that, we might see a nice little rally. Comes in expected, probably stay pretty flat. But you can kind of see the expectations, how we're going to get to that 2% number going into the summer as inflation keeps to come down. So tomorrow's report is definitely something to keep a close eye on, and we'll see how things go. And then get out of here. The last thing, average 30-year conventional. We're about 6.2%, up from 6.11% last week when we talked. We got down to 6.04. We're trying to get through that 6% rate, but it's definitely been a tough level of resistance. Keep getting rejected with this positive stuff, this employment numbers and things like that. So we'll see where we go from there. But the last thing I wanted to share with you guys, I thought this was a good mortgage meme to kind of see where we're at in the markets. So this is obviously from Back to the Future. We got Marty McFly on the left. He's a seller stuck in the past, still expecting to get what he got 6 months to a year ago, what his neighbor got. So seller stuck in the past. And we got Doc on the right as a buyer stuck in the future. So we have buyers telling, me, that they're going to wait for mortgage rates to come down. And if you do that, then everybody's thinking that. So if everybody waits till mortgage rates come down, once that happens, we're going to have a ton of people in the market. It's going to be a lot more competitive, and that might spike home prices. So it's just kind of an example. I thought a pretty fun example of where we are in the markets currently. So if anybody needs anything at all, please do not hesitate to reach out. Besides that, I hope everybody has a great week, and keep your eye on that inflation data tomorrow, and we'll see what the Fed does next week. Have a great week, everybody.